Stocks in Asia are mixed, with Japan shares on track for a fresh 3-decade high. Investor focus will be on a key U.S. CPI print due Thursday for cues on the timing of the Fed's rate cut. President Biden's top economic advisor, Lael Brainard, says the work is not yet done when it comes to lowering consumer prices. So joining us now is Ryan Lamond. He is NeoVision Wealth Management co-founder and CEO. So Ryan, as we mentioned, markets really struggling to find some direction until this U.S. CPI print. Are you two sitting on the sidelines right now? I mean, how are you sort of placing yourself as we await this print? And do you think you'll actually get the clarity you're looking for tomorrow?
Well, the end of year was very interesting after the pivot. We've done very well with the Russell 2000s, where we booked our profits. However, starting January, well, the January effect, we're on the sidelines for now observing. Regarding the CPI, if you look at the used car sales, used car prices, they are in absolute free fall. So we do expect the CPI to be tame. But we need much more for clarity, and this is on corporate profits. Corporate profits has to catch up with the massive rally we've witnessed end of year. If they don't catch up, then yes, it's not a very solid rally. And second, we need to see it broadening much more than it actually is.
Yeah, I mean, I was speaking to one of the dealerships, one of the larger ones. I'm not going to say their name, but they were saying cars are just piling up. They had ordered all of these cars thinking people would buy them. Now they have over 150 brand new cars in stock, and they don't know what to do with them. Ryan, in terms of what we're going to do with this crypto trade, it was kind of buy into it, buy the rumor, you sell the fact. That's what we saw in the price action. How do you approach the proposition today, given everything that's happened in the last few hours?
Well, we do think that the ETF will be approved eventually. It is BlackRock. JP Morgan, though Mr. Jamie Dimon was quite against Bitcoin, is acting as an authorized participant for the ETF. This is very positive for Bitcoin because it will expand adoption much more than the current adoption we're seeing in the US. It will allow traditional investors to buy into Bitcoin through an ETF, through a traditional medium, rather than opening an account with a custodial exchange where many are quite hesitant about. So it is a big positive for Bitcoin. The question is, when will it happen? Not if it's going to happen.
Well, and Ryan, the question also, our Eddie Vandervalt with MLive says that it could potentially we could see some upside, but then history shows that there will be a manic rally followed by a crash. I mean, is that your expectation as well?
Bitcoin is a very volatile let's call it a security, if you will. So yes, we wouldn't be surprised. Big rallies, big crashes. This is Bitcoin. However, if you look at the price action for the past 10 to 15 years, it is upward sloping. So you're seeing rallies and crashes, but all of it is sustainably going up. And once the ETF hopefully gets approved, we will see less volatility. So all of these rallies and crashes will happen within a more limited bandwidth than what we're seeing currently. The more adoption, the less whales. As you know, there are lots of whales on Bitcoin. The more stable the price action will be.
Ryan, I look at a chart of the topics, and I have to drag it back on the x-axis all the way back to 34 years because we are close to that kind of a record high. The weaker yen is playing into the mix. But now with a potential regime change from the Bank of Japan and this kind of trade run its course, is it the time to move out of Japanese stocks? Because I know that you were a fan late last year.
We are still fans of Japanese stocks. They are unloved. They are underrated, if you will. Japanese yen on a PPP basis versus US dollars, 40% devalued versus US dollars. So there's quite some room there. It's all about inflation now and how the BOJ will act upon it. In the meantime, we remain positive on Japanese stocks, at least over Q1.
What about other emerging markets, Ryan? We were talking earlier about how they are having a difficult time as we await that CPI print. I mean, I know in your note you said that not necessarily China, but are there other emerging markets that you are a fan of?
Absolutely. Well, as you know, we've been relatively on the sidelines with regards to U.S. equities because it was a very, very narrow rally that we've seen in 2023 based on only 7 stocks. And we are traditional long-term institutional investors. We don't like this. And that's why we've replaced it with Brazilian stocks. And Brazilian stocks have done very well for us in 2023, up 29% for a PE ratio of 5 to 6. So we've consumed very little of our risk budget when investing into Brazilian stocks. We're also into GCC stocks. Currencies are pegged to the dollar, politically very stable, very low debt to GDP. And the countries here are exporters of capital. So when real rates are as high as they are today as an exporter of capital, that's very positive for the GCC as emerging markets. So we are also positive on the GCC stock markets. And finally, China, very, very selectively, very high quality positive cash flow generating companies, but in a very shy way, if you will.
Okay, just small steps. That's how it all starts. Ryan, thank you for that. That's Ryan Lemon. He's the Neo Vision Wealth Management co-founder and CEO.